Yuka Roy joins us here in studio. Good evening to you, Yuka. China continues to play hardball in the face of Donald Trump's 145% tariffs, and the latest economic data offers some encouragement.
Well, Mark, China's first quarter GDP came in at a surprisingly brisk clip, helped in part by solid domestic consumption. Economists, though, expect growth to slow down in the coming months as higher tariffs start to bite. The World Trade Organization said on Wednesday that it expected global trade to shrink 0.2% this year, down from its previous estimate of 3% growth. Beijing also named its new trade negotiator as it again told Washington to stop threatening and blackmailing. Luke Schrager has more.
With 5.4% growth for the first quarter, China's economy did better than expected, as Beijing insisted it would weather the ongoing trade war with the United States.
In the short term, the high tariffs imposed by the United States will bring certain pressure to my country's economy and foreign trade. But it cannot change the general trend of China's continued long-term improvements in the economy.
Growth in the first 3 months of the year was export-driven and a result of Chinese businesses front-loading or rushing to ship goods out before US tariffs, now at 145%, snapped into place. And that means a far less rosy outlook in the months ahead.
The worst is probably on the way because of this tougher trade restriction being imposed by global countries. And it's not only about US-China mutual trade, it's about whether global growth will also decelerate when we start to see more trade barrier between different countries.
Beijing has sought to portray itself as a bastion of stability and as a standard bearer for free trade against US unpredictability. However, in a sign it could be altering tactics, at least in its dealings with Washington, it quietly appointed a new trade envoy on Wednesday, one with 4 years' experience at the World Trade Organization and with a legal background likely to prove useful in future negotiations. It comes as Chinese President Xi Jinping continues his tour of Southeast Asia, deepening Beijing's trade ties with its neighbors as it looks to reduce commercial reliance on the United States.
Meanwhile, in what could be a litmus test for others, Japan's trade delegation set to hold talks at the White House later this Wednesday.
Well, diplomats are referring to Japan as a guinea pig, Mark, according to the Financial Times, as it's the first in a long list of countries that have asked for meetings with the US officials to try and negotiate their way out of Donald Trump's so-called Liberation Day or reciprocal tariffs that have now been paused for 90 days. Japanese Prime Minister Shigeru Ishiba on Monday repeated that his country did not plan to make big concessions, vowing to protect its national interest. Economic Revitalization Minister Ryosei Akazawa, who's leading the delegation, voiced some optimism as he left for Washington earlier.
Mr. Bessent, the Treasury Secretary, and Mr. Greer, the Trade Representative, are both known to be pro-Japan. They're also widely respected and very capable professionals. I'm confident that we will be able to build mutual trust and have good talks that result in a win-win relationship that will serve the national interests of both Japan and of the United States.
Now, the Japanese delegation wasn't expecting this, but Donald Trump says he's joining the talks directly at the White House. In a social media post, he hinted that he would put pressure on Japan to shoulder more of the regional defense costs. More market access for US farm products is also on the cards. Washington has already hit its ally with new tariffs on steel and aluminium and on cars, as well as a 10% baseline tax on all imports. A 24% reciprocal tariff is currently on hold. Japan's large trade surplus with the United States is a sore point for the president. Last year, it stood at $68.5 billion, the seventh largest among the US's trading partners. Cars account for nearly 30% of Japan's exports to the US, while American cars account for less than 2% of its imports from the US. This may be due to different safety standards between the two countries and customer taste. But for Donald Trump, it's an example of Japan's non-tariff trade barriers, Mark.
Cars, eh? Well, also caught in the headlights of a trade war is American chipmaker Nvidia.
Yeah, Nvidia has been a poster child of the AI boom in recent years, but the ongoing trade war is hitting the semiconductor company hard. Its shares are down 10% today after the company revealed that it was preparing to take a $5.5 billion charge linked to its export of its latest graphics processing units to China and elsewhere. It said that the government would require a license to ship those chips out of the US. The H20 GPUs were designed specifically for China to comply with rules imposed by the Biden administration that banned the sale of advanced AI chips to China. Now, Wall Street tumbled after a fresh warning from the chairman of the Federal Reserve that tariffs could drive up prices and have a lasting impact on the US economy and pose a challenge to the central bank's effort to control inflation and boost growth. The Dow Jones is down nearly 900 points, the S&P down 3%, and the Nasdaq is sliding more than 4%, dragged by Nvidia and other tech shares. And also the US dollar has dropped against the euro by about 1%. Earlier, European bourses ended the day mixed, with London and Frankfurt eking out small gains, while Paris finished the day flat. And that's it for business.
Yuka Roy, thank you very much indeed. Yuka back with more business, of course, very shortly. Great to see you. Thank you.